Hello there. We're going to talk about something that can cause a fair bit of panic. That's unexpected letter from HMRC saying you've paid the wrong amounts of tax. To help us get to grips with it all, this presentation has been put together by the expert tax advisors at Pro Tax Accountant, one of the UK's most trusted accounting firms. They're here to bring some much-needed clarity to this whole confusing business.
So imagine the scene. You've done your duty, you've filed your self-assessment, you've paid the tax you calculated was due, and you've breathed a sigh of relief. But then, weeks, maybe even months later, an official-looking brown envelope from HMRC drops onto your doormat. You open it, and your heart just sinks. They're saying your calculation was wrong, and you actually owe more. It's a horrible scenario, and it happens to thousands of us every single year.
So, how on earth do we make sense of it all? Well, over the next few minutes, we're going to break it all down for you. We'll start with that surprise notice, then we'll take a peek inside HMRC's powerful data engine. We'll look at the common things that trigger these changes, get to grips with the difference between a simple correction and a full-blown inquiry, see how you can challenge a decision you don't agree with, and finally, we'll map out a clear path forward for you.
Right, let's dive into part one, that initial shock when you get the notice. And the big question that follows, where did this new number even come from?
You know, this quote from a real online forum just says it all, doesn't it? It perfectly captures that feeling of frustration. You've done everything right. You've used their own system. You've put in your figures honestly. And now you're being told you're wrong. It can feel really unfair, especially when the letter casually mentions that interest is already piling up on a debt you didn't even know you had.
The official term for this notice is often an adjustment to balancing payment. But really, it just arrives with a new, bigger number, and not much else in the way of explanation. It leaves you completely baffled, scratching your head, wondering what could possibly have changed between the second you hit submit and when they sent this letter out. So, where does this mysterious new figure actually come from? Well, this brings us right to the heart of the matter, HMRC's incredibly powerful data systems. Let's pull back the curtain and see what's really going on.
Okay, the first thing you absolutely have to understand is this. HMRC is not guessing. They're not just plucking figures out of thin air. When you submit your tax return, that's really just the beginning of the process. Your numbers are immediately checked and cross-referenced against this huge ocean of information that HMRC already has on you. And the system that does all this heavy lifting is called Connect. Think of it as a super smart AI detective. It cost around £80 million to build, and it holds a truly staggering 55 billion pieces of data on UK taxpayers. Its one and only job is to connect all the dots and find any differences between what you've told them and what its data says your financial life really looks like. Now, what's really mind-boggling here is just the sheer scale of the information being vacuumed up. Connect gets data from every UK bank on the interest you've earned. It knows your salary and benefits from your employer. It sees property deals from the land registry. It can look at card payments and even your sales on platforms like eBay and Airbnb. It's even known to scan public social media posts for clues of a lavish lifestyle. The bottom line is HMRC has a pretty complete digital jigsaw puzzle of your finances. Okay, so with all that data flying around, what are the common little mistakes that Connect is designed to flag up? This next part catches a lot of people out, so you'll definitely want to hear this. One of the most frequent triggers, by far, is a mismatch between the income you've put on your return and the payroll data your employer sends directly to HMRC. This often happens with things called benefits in kind, like a company car or private health insurance. They're really easy to forget to include on your return, but the system will spot it. An incorrect tax code is a massive risk. And here's the kicker. It's your responsibility to check it's correct, not your employer's. Just look at this example. If your income tips over £100,000, you start to lose your tax-free personal allowance. Someone earning £125,140 loses it completely. Now, if they're still on a standard tax code, by the end of the tax year, they'll have underpaid by over £5,000. HMRC system will spot that a mile off and, you guessed it, send a bill. This one sounds so simple, but it's incredibly common. Every single bank and building society in the UK is legally required to report all the interest they pay to every customer directly to HMRC. So if you've got a few different savings accounts and you just forget to include the interest from one of them on your tax return, the Connect system will flag it up instantly. There's no hiding it. And here's an interesting one. Sometimes the mistake is actually inside HMRC's own systems.
it can happen. There's a known glitch where the system can wrongly include benefits that are already taxed through your payroll when it's calculating your student loan repayments. This can make it look like you owe more than you really do, triggering an adjustment that you then have to challenge.
Right. Let's break this down a bit further. When HMRC finds one of these little mismatches, they have two main ways of dealing with it, and it's really important to understand the difference between them. So on one hand, you've got a correction. This is for what HMRC sees as an obvious slip-up or a clear mistake, like a typo or that mismatched PAYE data we talked about. It's mostly an automated process, and they've got 9 months from when you filed to issue one. On the other hand, there's the formal inquiry. Now, this is a much more serious affair. It's a deep dive, an investigation into your whole tax return, or at least specific parts of it. This one requires a formal written notice, and they have a full 12 months from your filing date to kick one off. So what happens if you get one of these notices and you're sitting there thinking, hang on, they've got this wrong? Well, you do have the right to challenge it. You'll want to listen closely to this part because the process has to be followed to the letter. The official process has 3 main stages. First, and this is crucial, you must appeal in writing to HMRC within 30 days. If they don't budge, your next move is to ask for an internal review. This means a different, supposedly independent officer at HMRC will take a fresh look at your case. If that still doesn't sort it out, your final stop is the first-tier tax tribunal, which is a court that's completely independent of HMRC. But, and this is a big but, a word of warning, you have to be precise. In the recent case of Mrs. Yaxley, she challenged a calculation by writing a letter saying she wanted to appeal. Simple enough, right? Wrong. Because the legal deadline to amend her tax return hadn't passed yet, that was the technically correct procedure she should have followed. In the end, the tribunals threw her case out simply because she used the wrong word. Even the judge criticized HMRC's behavior, but rules are rules. The crucial lesson here is that the specific words you use when you write to HMRC can literally make or break your case. Okay, let's move on to our final section and pull all of this together into a clear plan so hopefully you can avoid these headaches in the first place. So here are your pro tips, your action plan. First off, always download and save a PDF of your full tax calculation the moment you file. That's your evidence of what you submitted. Second, make a habit of checking your tax code, particularly if you get a pay rise, to make sure you're not accidentally underpaying tax. Third, if a recalculation notice does land on your mats, never ignore it. That interest clock starts ticking from day one. Fourth, as we just saw with the Yaxley case, know the jargon. Understand the difference between an amendment and an appeal. And finally, if you have any doubt at all, get professional advice straight away. That 30-day window to respond is not very long. Now, it's really important for us to say that this information is for general guidance. Everyone's tax situation is different, so please don't take this as specific professional advice for your own circumstances. Before you make any financial decisions or fire off a letter to HMRC, we'd strongly recommend that you talk to a qualified professional. The team at ProTax Accountant, who put all this material together, are on hand to give you that expert, personalized advice. You can get in touch with them on WhatsApp, by phone, or through email. I really hope that's helped to clear up what can be a very confusing and stressful topic. I suppose the main takeaway is that in this digital age, what you don't tell HMRC can speak just as loudly as what you do. For more clear, practical tax guidance like this, make sure you subscribe to the ProTax Accountant channel. Thanks for watching.